Welcome back to Talk Tickers, where we help you make sense of the latest earnings calls. Today, we're going to be looking at Illinois Toolworks. Their Q3 2024 report just dropped.
Yeah, ITW, they're a Fortune 200 company. You know, they've got their fingers in a lot of pies, everything from like construction equipment to food service stuff. And you know what? Their stock price actually closed up over 3% today.
Oh, wow. That's pretty impressive in this market.
Right. But, don't let that fool you. The call itself, it was pretty somber, I gotta say.
Really? So what's the disconnect there?
Well, they're definitely feeling the pressure of this, this whole economic uncertainty thing that we're all dealing with.
Right. Makes sense. So, okay, we're talking about a company with 7 different segments. Like, where do we even begin to unpack all of this?
Well, I think the best place to start is with the big picture. Despite what they're calling a moderating demand environment, ITW still managed to actually increase their profitability.
Wait, hold on. How is that even possible? Like, the revenue's down.
Right. It is. But it's really a testament to their operational strength.
Yeah, but how do they make more profit with less revenue?
That's where their enterprise initiatives come in. Basically, it's this whole suite of strategies they have that are focused on efficiency and, continuous improvement. They're figuring out how to do more with less, which is super important in a tough market like this.
So they're squeezing more profit out of each dollar, even with less overall revenue. Got it.
Exactly. Now, I don't want to sugarcoat things. I mean, revenue did decline, and that's mainly because of weakness in 2 of their key markets, automotive and construction.
Oof.
Yeah.
Those are pretty big sectors for them. How bad are we talking here?
Yeah, it's not great, obviously. But even though those sectors are struggling, ITW is actually outperforming a lot of the industry benchmarks, especially in automotive.
So they're not just surviving, they're actually doing better than their competitors.
They are. They're really navigating these headwinds better than a lot of other companies.
Okay, so what's the secret sauce here? How are they doing it?
Well, it's a few things. I mean, for one, these enterprise initiatives we were talking about, they're definitely helping. Like, they're cutting costs, streamlining operations, but they're also making some strategic moves. They're simplifying their product lines, for example.
Simplifying. What does that even mean in the context of a global manufacturing company?
Yeah, so basically, instead of offering this huge range of products, they're focusing on the ones that are the most profitable.
Ah, okay. So less is more kind of thing.
Exactly. And we're seeing this especially in their specialty product segment. By streamlining, they're reducing complexity and costs, which, directly boosts their margins.
Okay, so streamlining and focusing on high profit products. Got it.
But I feel like there's got to be more to this story. I mean, record operating margins in this economy. That's crazy. You're right. There is more. This is where things get really interesting. 3 of ITW's segments, welding, construction products, and specialty products, they're actually seeing record operating margins this quarter.
Wait. Hold on. Record profits when their core markets are struggling?
Yeah.
How is that even possible?
Right? It's pretty wild.
This is where I get lost.
Yeah, so the enterprise initiatives are definitely a big part of it, but they're also benefiting from these strategic decisions, like simplifying their product lines.
Like we were just talking about.
Yeah, exactly. And it's proving to be incredibly effective, especially in a market like this where every penny counts. I mean, they're making tough choices, but those choices they're really paying off.
It sounds like they're finding pockets of strength, even when some of their major markets are not doing so well.
Huh.
Kind of like finding an oasis in the desert or something.
That's a great analogy. And that's the benefit of having a diversified portfolio. When some areas are down, others can pick up the slack. Take their China business, for example. It's actually thriving, particularly in the automotive segment.
China. Seriously. All I hear about in the news is economic slowdown over there.
Yeah, it's true. The overall Chinese economy is facing some challenges, but ITW has carved out a really strong position there, especially in the booming electric vehicle market.
So they're riding the EV wave in China. That's smart. But what about innovation? I mean, are they just relying on cost cutting and riding market trends, or are they actually developing new stuff?
Oh, they're definitely investing in innovation. They're putting a lot of resources into what they call customer-backed innovation, or CBI.
CBI. So even in a tough market, they're pouring resources into developing new products and services. What exactly is CBI?
Well, think of it as a laser focus on developing products that directly address customer pain points. They're not just innovating for the sake of it. They're actually solving real problems for their customers.
Sounds promising, but is it actually working?
We'll dive into some specific examples from the call in a bit, but I can tell you this. CBI is already paying off. It's a major driver of their success in certain segments, and it's helping them outpace their competitors even when overall demand is, slowing down.
Okay, so we've got moderating demand, record profits in unexpected places, and a strategic focus on innovation. Is that the whole picture, or is there something we're missing?
Well, we also need to look beyond the numbers themselves and analyze what management is saying about their overall strategy and outlook for the future.
You're talking about their plans for mergers and acquisitions, right?
Mm,
I'm curious about that, especially with them divesting their interest in Wilson Art. What are their plans for, acquiring new businesses?
exactly. And they were pretty candid about their approach to M&A. It gives us a lot of insight into their long-term vision. So before we got sidetracked, we were talking about this whole customer-backed innovation thing, or CDI. Seems like it's really working for them.
Right, right. They're laser focused on those customer pain points instead of just throwing spaghetti at the wall and seeing what sticks, innovation-wise. Got any concrete examples of how that's actually playing out in their different businesses?
Oh, absolutely. Let's take their welding segment, for instance. They launched a new line of welding equipment this year, and it's got some pretty high-tech stuff, solves a really specific problem that a lot of welders face.
What's up?
Getting good welds consistently, even when the conditions aren't ideal. On a job site, things aren't always perfect.
Yeah, makes sense. So it's not just a fancy new product, it's actually solving a real problem. Did it work? Did welders like it?
Oh, yeah, it was a big hit. Welders found it easier to use, and get this, it actually helps them reduce waste and be more productive.
Win-win. Especially these days. Sounds like they're finding ways to innovate, even in segments that are facing some headwinds.
Exactly. And that's translating into market share gains. We're seeing similar stuff in other segments too. Take their food equipment division. They're making some serious progress in energy efficiency.
Interesting. How so?
Well, they're developing appliances that use way less energy and water.
Oh, yeah. That's huge right now. Everybody's worried about sustainability. Restaurants are feeling the pressure to be more eco-friendly, and saving money on utilities is always a good thing.
Yep. It's a smart move on ITW's part. They're positioning themselves as leaders in this space. It's going to pay off big time down the road.
Yeah, no doubt. These are some pretty impressive examples. I'm starting to get why this CBI thing is more than just a buzzword. It's baked into their whole strategy.
It really is. And it goes beyond just products. They're investing a lot in their sales and service operations too, making sure customers have a good experience from start to finish.
So it's a holistic approach, not just about making the sale, but building those
You
relationships.
got it. But we got to remember, this is a long game. It takes time to develop innovative products, get them out there in the market, and actually see the revenue growth.
Right. They're building a foundation for the future. But what about the rest of their financial picture? We were talking about M&A and that divestiture they did with Wilson Art. How does all that fit in?
Good point. We need to talk about their capital allocation strategy. They're really committed to returning value to shareholders, dividends and share buybacks. They just announced their 61st consecutive annual dividend increase.
Wow, that's pretty incredible.
It is, especially with all the market volatility we've been seeing. And as for M&A, they're definitely open to acquisitions, but they're being very picky.
So no spending sprees.
Nope. They've got specific criteria, looking for businesses that are unique, have potential for better margins, and, are priced right.
Smart. They're not just chasing deals for the sake of it, they're being strategic.
Yep, thinking long term. Now, switching gears a bit, management also talked about their global operations, and one region really stood out.
You mean China? We touched on it earlier. I'm really curious about that. How are they managing to do so well there when everyone else is struggling?
It's a good question. China's economy is definitely slowing down overall, but ITW's is actually seeing strong growth there, especially in automotive, and they're attributing that to their position in the electric vehicle market.
Ah, so they're not just benefiting from the global EV trend. They've really got a foothold in one of the fastest growing EV markets in the world.
Exactly. Those early investments they made in China's EV market are paying off big time now. It's a big part of why they're doing so well in this tough global environment.
So it sounds like ITW is handling this economic storm pretty darn well. They're outperforming, they're focused on innovation, and their operational efficiency is really paying off. But what about the risks? What are some things that could trip them up?
That's an important question, and you know what? That's exactly what we'll unpack after the break. While they're doing great right now, there are always external factors and potential risks that could throw a wrench in the works. Stay tuned. We'll dig into that next.
We've covered a lot of ground today, haven't we?
We have. It's pretty impressive what ITW is doing, you know?
Yeah, I'm impressed. They're not just writing this thing out, they're actually finding ways to get ahead.
That's what I like about them. They're proactive. They're using these enterprise initiatives, they're making smart divestitures, and this whole customer-backed innovation thing, it's really setting them apart.
It is. They're outperforming in key markets, they're seeing record profits where you wouldn't expect them, and they're clearly committed to growth.
Yeah, it's a great example of how a well-run company with a diverse portfolio can weather a storm like this. I mean, they're not just surviving, they're getting stronger.
So as we wrap up here, what's the biggest takeaway for you?
I think it's their dedication to always getting better, that continuous improvement mindset, whether it's through those enterprise initiatives, managing their portfolio strategically, or just their commitment to innovation. They're not standing still.
Right, they're always adapting, always looking for an edge.
And that's a lesson we can all learn from, whether you're an investor or just, trying to succeed in business in general.
I totally agree. If anyone out there wants to learn more about ITW, I highly recommend checking out their investor relations website.
Yeah, it's got a ton of great info, financials, presentations, transcripts of their past earnings calls. Definitely worth a look.
It is. Well, that's all the time we have for today. Thanks for joining us for another Talk Tickers Deep Dive.
Always a pleasure.
And be sure to tune in next time. We'll be breaking down another earnings call and helping you make sense of it all. Until then, happy investing.